So you'll be relieved to know that I'm laying off the psychology, at least for now. Today we'll talk about a strategy for trading pullbacks. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. Even though the trader's mindset and all the other boring stuff is the most important thing, I try not to labor over it too much. We'll talk about it more in the future, but today we're talking about entry strategy. More specifically, we're talking about trading pullbacks. You may have heard the phrase, the trend is your friend. And the most convenient way to trade in the direction of the trend is by implementing a pullback trading strategy. Trading pullbacks in trends is a basic trend following strategy. There are many different ways to profit from trading pullbacks, and in this video we're going to show you a very practical way of trading pullbacks in trends. You can profit from trading pullbacks on all time frames because a trend can show up from the 5-minute chart all the way up to the monthly time frame. So doesn't matter if you're a day trader or a swing trader, you can safely apply our pullback trading strategy. Before we start covering the rules of our practical pullback trading strategy, we're going to first define a pullback and learn how to recognize it. A pullback simply represents any price movement that is against the prevailing trend. If we're talking about trading pullbacks in trends, we're basically entering in the direction of an uptrend as the market is trading at a lower price or at a higher price in a downtrend. The pros of trading pullbacks in trends are that you're buying low and selling high. If we're trading pullbacks in an uptrend, you're basically buying low, and if we're selling pullbacks in a downtrend, we're basically selling high. Kind of goes without saying, right? The second advantage about trading pullbacks in trends is that it's actually easier from a psychological standpoint because you have the trend working for you. The only indicator you need for our pullback trading strategy is the Fibonacci retracement tool. The Fibonacci retracement tool measures the latest trend movement and divides it into the Fibonacci ratios that can be used to identify potential support and resistance levels where you would anticipate price to reverse. Just so you're up to speed, the Fibonacci tool uses the so-called golden ratio to calculate certain levels at which you would expect the price to reverse. If you read up on this tool, you'll read about all the mystical, magical properties of the golden ratio and the Fibonacci numbers and how it appears throughout nature and so on and so on. It is actually kind of cool and all, but for trading, you can forget about all that. The fact is, the Fibonacci or Fibo tool works because traders expect it to work and they act accordingly. When trading pullbacks in trends, the most important Fibonacci levels are the 38.2%, the 50%, and the 61.8%. Normally, the distance the pullback will go all comes down to the strength of the trend. Usually, the stronger the trend, the smaller the pullback will be, in which case it may only reach the 0.382 fib retracement. Now let's see how you can effectively trade pullbacks and how to make profits from trading pullbacks by simply following our pullback trading strategy. The power and the secret of the pullback trading strategy are all contained by the fact that we're aiming to trade in the direction of the trend by entering on a pullback. Trading pullbacks in trends really offer you the opportunity to lower your risk while maximizing your profits. Obviously, in order to profit from trading pullbacks, we first need to define the trend, so we make sure we only trade pullbacks with the trend because these are the setups that can make us the big profits. Which brings us to step 1. Identify a bullish trend characterized by a series of higher highs and higher lows. Identifying the direction of the trend should be a fairly easy process. The easiest method to use to identify the trend is the swing high and low structure that we've discussed in prior videos. In essence, an uptrend is defined as a series of higher highs with a series of higher lows. It's important to use a higher time frame to determine the trend regardless of the time frame you normally base your trades on. Step number 2, switch to the shorter time frame and wait for a pullback against the uptrend. After successfully identifying the trend, we can switch lower to our preferred time frame. It can be whatever time frame you feel most comfortable with, but for the purpose of this pullback trading strategy, we'll use the 1 hour time frame. Now it's time to bring into play the Fibonacci retracement tool, which brings us to the next step of our pullback trading strategy. Step number 3, place your Fibonacci retracement indicator between the last swing high and swing low levels prior to the pullback. Identify the most recent swing low and swing high and place your Fibonacci retracement indicator between the two swings. Note that when you draw your Fibonacci retracement, you should click first on the earlier candle and then click second on the later candle. In other words, it should be placed from left to right. Next, we need to figure out where to enter the trade, which brings us to our next step. Step 4, buy anywhere between the 50% and the 61.8% Fibonacci retracement area. After you've placed the Fibonacci retracement tool on your chart, mark the area between the 50% and the 61.8% Fibonacci retracement and buy as soon as the price trades within that area. It's up to you whether or not to buy as soon as the price hits the 50% or to wait for the 61.8%. With experience, you'll be able to fine-tune your entry and profit from trading pullbacks. Step 5, place the protective stop loss below the swing low. The last swing low used to draw the Fibonacci retracement levels can provide us with a very attractive place for our protective stop loss. Since a break below the last swing low will invalidate this trade, that's where we'll want to get out of it. Step 6, take profit once we break above the previous swing high. In order to profit from trading pullbacks, we need a strategy for taking profits as well. The ideal place to liquidate our position is once we make a new high. The market never moves in a straight line, and after we break to new highs, a pullback occurs more often than not. So, if you want to be in and out of the market very quickly, that's the easiest way to profit from trading pullbacks. Alternatively, if we want to maximize our profits, we can take only half of the profits once we break to new highs, and the remaining half of our position can be taken at the 100% Fibonacci extension using the Fibo extension tool. And of course, the prior was an example of a buy trade. You can use the same rules, but in the opposite trade direction for a sell trade. Trading pullbacks and trends can be one of the most rewarding trading strategies available. The pullback trading strategy is a time-tested, profitable strategy, and the key to its high rate of success is given by the fact that we're trading in the direction of the prevailing trend. The way to profit from trading pullbacks is by simply buying weakness in an uptrend and selling strength in a downtrend, which is what the pullback trading strategy presented in this video is trying to accomplish. And that's all for today's video. Come back for my videos on Monday, Wednesday, and Friday at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash that like below. Subscribe and hit the bell if you want to be notified of our videos in the future. And have a great Wednesday, and I will see you on Friday.